As a CPA for the last 30 years, I am often asked by clients, what should I be monitoring? Or in effect, what report should I be running to keep a handle on my business? If you have been following this course sequentially, hopefully by now it has sunk in the importance of keeping highly accurate accounting records on the accrual basis, where revenues are matched with expenses in the period they relate to. The whole art and science of accounting is to articulate in numbers the factual results of the various transactions and realize changes that occur in your organization. Reporting provides various windows and lenses to obtain a financial understanding how your organization is doing and where it is at. In the journal entry lesson, we spoke about that there are really only 5 types of accounts: assets, liabilities, equity, income or revenue, and expenses. You will find that all the reports we look at in QuickBooks, unless they are just informational reports like some of the list, will involve expressing some type of activity using one or more of these type of accounts. So for example, let's go to the Report Center and look in the company and financial area. Keep in mind throughout our review of different reports, if you ever want to learn more about a given report, including what information the report gives you, as well as customizing it, you can always click on the Help button represented by the blue question mark icon. We have already reviewed the profit and loss statement in this lesson, which represents revenue and expenses realized over a range of time. Notice that QuickBooks provides several versions of this report, as you can see in this section. All of these versions could be just as easily created by going into the Customize Report area, as we had done earlier, and making the appropriate selection to get what we wanted. So if we open up the profit and loss previous year comparison report, we would see that it's just a standard profit and loss report with the previous year's selection checkmarked under the Display tab. We could have easily done this ourselves, but QuickBooks created various versions of its standard reports throughout the reporting section for our convenience. Another aspect you will notice throughout the reporting section is for every standard report version, which will show the numbers at a summary level, also has a detail report version representing the detailed transactions making up summary amount. Typically, you can get the detail information you seek in the standard report anyway by drilling down on a particular number you want to see the detail for. So for example, in the standard profit and loss report, you can double click on any of the amounts and you will get a transaction list report showing you the detail. If you pick the detail profit and loss, all the detail will show automatically for every account, which makes this report quite lengthy and would probably not be printed out, but just reviewed on screen. In terms of important reports, I would certainly suggest the profit and loss is at the top of the heap along with the balance sheet, which lists your assets, liabilities, and equity as of a given point in time. Notice in the company financial area there are many different versions of these reports, which were created through the Customize Report feature. One note I want to make regarding the balance sheet is that the total assets must equal total liabilities and total equity. Another way of looking at this is that for every asset a business owns, there are 2 general categories of claim holders against those assets. One group of claimants are the people who you owe money to, and they generally have the first right to those assets over the second category of claimants, the equity holders, who are the investors of a business. So if you ever find that total assets do not equal total liabilities and total equity, then you are out of balance and need to determine why this is happening. Sometimes you have to use one of the diagnostic tools under Utilities to correct this situation, but seek help first before going down this path. The statement of cash flow is another often used report since it shows you how you received cash and how you spent it. Knowing sources and uses of cash is important since cash is the lifeblood of any organization, and if it is mismanaged, it can cause tremendous problems and even lead to ultimate failure. However, the statement of cash flow is sometimes a little trickier to understand than the profit and loss and balance sheet reports, and you may have to have your accountant provide you with a perspective on how to set it up, interpret it, and how this report is best used. Another type of report we see in the company and financial, as well as other areas throughout the reporting section, are graphs. A good example of a graph is the income and expense graph. When we open this up, we see both a bar chart and pie graph representing both revenues and expenses for a given period of time that we can change by clicking on the Dates button. And if we want to see the pie chart and specific component breakdown, as shown in the box to the right of the pie chart, we can see this perspective by either account, customer, or class. Also, note we can drill down on the details of the graphic representation by putting our cursor over the specific area we want to learn more about and double-clicking. So for example, if I was looking at a breakdown of income or revenues by customer, notice I click the Customer tab and then the Income tab below, I would get the following pie chart with the top 10 customers, showing in the pie chart and component breakdown window. If I wanted to drill down on one of the customers, let's say this one represented by the green slice of the pie, I would double click on it and it would show me a bar chart representation of what month the revenues were recognized. And if I wanted to see what specific revenues made up each month, I would double click on the appropriate bar graphic and I would get a detailed transaction report showing me the specific transactions making up the total, and I could further drill down to look at the actual transaction, in this case an invoice. So you can see the graphic reports can be quite sophisticated and detailed and may be helpful in giving your end users or yourself a more complete picture of things, since the old saying is, a picture's worth 1,000 words. In terms of the other areas in reporting, here are some other suggested reports you may want to consider reviewing on a regular basis. Although I do want to make clear that I am in no way saying that these are the only reports you should run, but based on experience, I have found these reports to be helpful to business owners and employees wanting to get a cross-sectional view of their business. The customer and receivable reports, the AR aging report provides you with an analysis of who owes you what and how current or past due are the amounts they owe. When you open up this report, you will see what is owed to you by customer based on the date provided, which is usually the current date, but you can change this date if you want. Notice that there are also 30-day time buckets available indicating if any past due amounts fall into these past due 30-day time buckets. This provides you with a gauge of how past due any amounts are. Also, you can change the interval if you want by going into the interval days field and making your change. The through days past due fields will then provide the cutoff where all amounts past the number of days indicated will all be lumped into one column amount. There is also a detailed version of this report, but if you drill down on any of the summary numbers, you will be given the detail just like we did with prior reports we reviewed together. The average days to pay is another insightful report I like, since it tells you the average amount of time it takes all your customers to pay you. Many times people are surprised, both on the plus and minus side, how long some customers take to pay. For those that pay promptly, you may want to set up some kind of rewards program to say thank you. For the slow payers, you may want to determine how you can speed up their payments. The transaction list by customer allows you to be selective in terms of the type transactions you want to see for a given group of customers. Even though this report gives you all the transaction type breakdowns by customer for a given range of time, by simply going into filters and selecting the transaction type field and selecting multiple transaction types, you can choose the type of transactions you want to see. So if you just want to see credit memo transactions, you can select this, and then your report will give you all credit memos issued to customers over the period of time selected. Any of the sales reports can be useful, whether you want to see your sales by customer, item, or sales rep if you use them. Notice the sales by item report gives you quantity, pricing, cost of goods sold dollars, and percentages and gross margin analysis as well. If you sell inventory, this is a must report to review regularly. Note that all of these reports you can see at the summary or detail level for whatever period of time you choose, and of course, you have full drill down capabilities. If your business is job-oriented, then the jobs, time, and mileage reports are highly useful. Certainly knowing your job profitability in overall dollars or by item is important, so any of these reports can be very useful and provide the ability to see this information in summary or detail. All of these reports just show dollar differences. If you want to also see percentage differences, you may want to export these reports into a spreadsheet and then add a column of formulas to compute the percentages. An obvious thing to look for in these reports are negative amounts in the difference columns indicating you lost money on a job, which should immediately trigger a review of some type to prevent such a situation in the future. The unbilled cost by job can be insightful and could represent money you are leaving on the table, since it represents expenditures that you have flagged to be invoiced to a customer but have not been invoiced yet. Therefore, a review of this report could generate invoicing that has been missed or forgotten. The job estimate reports allows you to see how accurate your estimating is if you do estimates. What you want to look for are significant differences between estimates and actual and whether they relate to revenues and or expenses. Remember, the closer to zero the differences are, the more accurate your estimating is. Large differences mean your estimates are inaccurate. Again, since percentages are not shown, you may want to export one or more of these reports into a spreadsheet where a percentage column can be added to measure the relative percentage gauge of any inaccurate estimates. If you use purchase orders for jobs, then monitoring open purchase orders by jobs is another must, since if you have something on order and have not received it, then it could be holding up a job, which affects your cash flow and customer satisfaction. Time reports provide the insight as to where time is spent by your employees and or independent contractors, either by job, by name, or by item, and are therefore an important tool in managing your human resources. Each of these reports provide ready insights as to where did the time go, or in the case of employees or others, how many hours did these people spend on specific activities, and is that in line with the reviewer's expectations? For example, if I looked at the time by name report and I know I paid Dan Miller for 200 hours last month and only 160 hours related to actual jobs or assignments, then the question is, where did the other 32 hours go? Some people will like these reports more than others in these type of situations. Mileage reports would really only be pertinent if you had vehicles that you use in your business that you track mileage for. The mileage function is covered in the advanced course, so we don't discuss it here. In the vendor area, the most used report is probably the accounts payable. Again, which is designed exactly as the AR aging report discussed earlier. For example, notice the 30-day time bucket columns for past due amounts. The only difference is it pertains to what you owed to vendors versus what you owed by customers. Another report worth noting is the transaction list by vendor, which provides all your vendor activity by transaction type. And this report can be very useful to see all the activity, or if you want to be selective by selecting certain fields to filter on to just give you certain types of transactions, whether it be purchase order, bills, payments, etc. Since this report does not summarize the amount of activity, you can export into a spreadsheet and then create summation formulas to total what you want to, or another useful report if you just want to know what your overall expenses by vendors are, is to run the expenses by vendor report in summary or in detail that's found in the company and financial section. The purchases area provides reports based on purchase orders you make. Therefore, it does not include other non-purchase order expenditures and accordingly does not provide a complete reporting for all activity you do with a vendor if some of your expenditures with vendors are not done through purchase orders. The previously mentioned expenses by vendor report in summary or in detail found in the company and financial section would be where to go for all the expenditures you have with a vendor. Nevertheless, the purchase reports will give you purchases either by vendor, item, and provide you with open purchase orders in total or by job. The primary inventory reports include the inventory valuation report and the stock status by item or vendor report. Each report provides detailed information on the inventory you have on hand, whereas the valuation report will provide quantity and dollar values and the percentage that each inventory item represents of the total asset value or retail value. The stock status report provides other insightful information, including preferred vendors, reorder points, unit of measure used, and quantities on hand, on order, and average unit sales per week. Drill down capabilities on these reports allows you to quickly view detail as well. If inventory is an important asset and function in your organization, monitoring these reports on a timely basis is a must. Employee and payroll reports we cover in the detail in the next lesson. The banking reports provide general information for the most part, such as your deposit detail and what checks have been written and recorded. The missing checks report is interesting since it highlights any check numbers not recorded in the system that should be followed up on, since all check numbers should be accounted for in some way, shape, or form. Note that void check numbers are still accounted for in QuickBooks even though there's no amount associated with a void check. The reconciliation discrepancy and bank reconciliation reports are good to monitor since you should be able to reconcile your bank account to QuickBooks to the penny if you are doing everything correctly. When you do have discrepancies, the other bank report should help you find any differences between what you've recorded and what has cleared the bank. The Accountant and Taxes Report section is more geared to your accountant's use, but a report you may find helpful when looking into account activity is the General Ledger, which provides the most detailed reports of your account activity for a given period of time from period to period. A running balance for each account is also shown in the report, along with total debits and credits. The Audit Trail report provides the ability to see every transaction a given user has made for the period of time selected, and therefore can give you in seconds a whodunit if you're trying to figure out who recorded something that no one wants to take responsibility for doing. Budgeting is something we cover in the advanced course, so we don't discuss it here. The list report provides a detail of the list information we create in Lesson 4 and has some different display features than the reports we have viewed previously. For example, if we open up the account or chart of accounts list and go to the Customize Report button, you will notice that there is no date choice because the information in the list is not date driven, so whatever exists at the time you run the list is what shows up. However, notice you can choose the columns you want to show up in the report by just check marking next to the fields available. You can also sort by any of the fields you choose. This is in contrast to the activity reports we reviewed earlier, such as the profit and loss report, where the columns are already chosen and can't be changed, and the sorting is determined as well, since the profit and loss is laid out in a certain way where revenues are shown first, then cost of sales and expenses, etc. Another thing you can do in this type of report that you can't do in other report types is you can move the columns. So for example, if I go to the header field for a column and put my cursor over it, I get the hand icon, and if I hold it down with my left mouse key, I can drag it to another column position and it will move it as such. In this way, I can rearrange which columns show where. I know we covered a lot of ground in this section, and hopefully you now have a fuller flavor of your reporting options and which reports may be helpful to you that should be reviewed on a timely basis. In my experience, the key to getting the most out of reporting is to embrace it by using it and experimenting with different reports. Most importantly, play with the display and filter settings and see what new and revealing information you can come up with. I can almost assure you that new and important insights can be gleaned out of slicing and dicing your information by using the many tools you have available to do so in QuickBooks. Of course, your reporting will be rendered worthless if you don't properly record your transaction properly or if you fail to set up and use the list incorrectly. The motto garbage in, garbage out still applies, so be diligent in every step of your accounting processes and you will reap the reward that quality reporting brings you and your business.